Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 29th of December. Starting with Afriton, where it's great to see the shares finally break out after, 6-7 months plus in consolidation. We've broken that line of resistance there from April. That was around the 5 pence level. That's also level with the 50-day moving average, and the latest move clearing the 200-day line at 5.5 pence. Above that, we're looking for 8 pence, maybe over the next 6 to 8 weeks, something like that. So a decent target there for the start of 2022. On to a stock which has been going well recently, Atlantic Lithium, if I can get the right company on the screen. Here we've got the shares managing to break, I suppose after consolidation, break that line of resistance there from January. That was around 22 pence plus the 50-day moving average, and above that, on an end-of-day close basis, looking for as high as 38 or maybe even 40 pence over the next 1 to 2 months for this particular stock. Can't rule out a bit more jiggery-pokery around the 24-25 pence area, but it looks as though with that final bounce off the 50-day line, and actually a golden cross earlier this month between the 50 and 200-day lines, then we should take off finally. One of the stocks of last year, at least at the beginning, was cellular goods. Not quite so happy after the initial Q1 flurry, or in fact even the first week's flurry. Current situation is that it looks as though we're bouncing off the bottom, and while we're above the initial December support there at 6.4 pence, looking for a retest of December resistance, 11.5, maybe even 12 pence by the end of next month. Be cautious on the shares, maybe wait for a break of the 50-day moving average just around the 8 pence area. On to a stock which has had quite a bumper bit of news today, Cadence Minerals. Here you can see that the shares been in that rising trend channel since, I suppose over the last couple of years, in fact. A bit of slow progress, but the latest action here since October, very bullish indeed, with the unfilled gap to the upside. And then the break of the June resistance line there at 22 pence. Above that, we're looking for as high as 38 pence, maybe over the next couple of months. And also great that we've had a gap to the upside again, which is something which underlines the momentum behind this situation. Didn't think Napster was going to get off the ground or get into recovery mode, but it looks as though after that fall storm that we had between July and September, the shares are having another go. What we'd like to see now is an end of day or a weekly close above that line of resistance there from September, and also above the old low from the beginning of November at 0.52 pence. If we can do that, then we could be heading back towards the resistance on the way down, which I suppose is between 1 to 1.2 pence over the next 2 to 3 months. This stage anybody back below 0.4, and the initial neckline resistance on the base here would really delay the upside scenario. Requested stock next in the form of Oxford. Here you can see that the shares have managed to have a second go at breaking that line of resistance from June. That was around the 2.6 area, so above 2.6 pence, and especially while we're above the 50-day moving average of 2.36, you can say that the shares are looking to break higher. We've already had the higher low versus November for December, and with a decent clearance of the 3 pence area, the initial December resistance, maybe even by the end of this month, then we could see the shares up towards that resistance, that June resistance line projection at 5.7 pence for Oxford Cannabinoid. Moving along to a stock which used to be sort of flavour of the month, sort of faded away a bit after the turn of the year. But again, another stock here, Orosur Mining, which looks like it's revitalising itself in the closing days of 2021. Good bullish divergence there after the recent new lows for the share, so new lows for the stock, but the RSI trend line going up, and while we're above 12.25 pence, which is that February resistance line, looking to retest the post-July resistance at 25 pence over the next 1 to 2 months. Rambler Metals is next, and here you can see that Although it's been a slow process, and trying to get the shares sort of in focus here, slow process. We've had a nice rebound off the 50-day moving average. That was last week around 30.5 pence, and the longer we stay above that, the greater the chance of a retest of November resistance at 45, and looking for a Q1 target here on Rambler as high as 90 pence once we clear, or if we clear, 45 pence in a definitive way. Nice to see the cross there between the 50 and 200-day moving averages. That should and could push the stock or accelerate the stock higher over the near term. Just 3 stocks to go now. First is Shield Therapeutics. Here you can see that had a break of that falling wedge gap through the wedge, which is a very positive sign. We've got a V-shaped bull flag. That's what I call it. That sort of spike and then the dip. And we dip sort of to the halfway up in terms of the candle, and then breaking through. So an end of day close above the initial December resistance of 40.5 pence should be enough to take the stock up towards the post-August resistance at 50 pence over the next 4 weeks or so. Good to see also Tirupati starting to get its act together after the triple dive below 70 pence that we had between November and last week. Good consolidation now above the 50-day moving average at 77 pence, and the longer we stay above that, the greater the chance of a move towards that October resistance line at 105, perhaps as soon as the end of next month. News of the day from Valerium, which is back on the front foot, so to speak. That doesn't sound too strange. The Juno news pushing the stock off the recent support area, which has been in place in September, around 30 pence, and also bouncing off that March uptrend line. What we'd like to see now is a decent clearance of the 50-day line, 41 pence, and then that main June resistance line at 46. End of day or a weekly close above that should finally be enough to get the stock back on the road to the long-promised journey towards 90 pence, which I've been promising for some months. Obviously, it did look as though the shares could have done that in the summer, but we had the retracement, so above 46, looking for 90 plus over the next couple of months, let's say by the end of February, if we can get a pretty swift and close above 46 in the interim. That's it for me today. More updates tomorrow.